This is Aida Escamani with State Innovation Exchange. I lead our team, our legislative affairs team, and also our economic power project work. And we're super excited to have this conversation about taxes in the states and be joined some really incredible folks. For folks who just joined, this webinar is being recorded and we will also release it to our full network. We are very grateful to have our partners at the State Revenue Alliance here to share their latest research on tax justice initiatives in the states, overviewing notable state revenue bills introduced in the 2024 year, as well as anticipated trends and challenges legislators may face in 2025. This webinar is part of a series of briefings and organizing sessions that SIX will be hosting with partners and legislators in preparation for 2025, as well as throughout the months ahead on key economic trends in the states and across state borders, including more on revenue. Some quick housekeeping before we get started. This briefing, as I said, will be recorded and released to our full network. We also ask that you submit your questions throughout the conversation and presentation. You can do so via the Q&A function on Zoom. If you're unable to work that, you can always also pop your questions in the chat and we will refer to them at the end of the presentation. And with that, I will first pass the mic to our partner in this effort, Senator Noel Frame of Washington State.
Thanks, Ida, and good afternoon, everyone. Thank you for being here today. I thank to legislators, to staff, and our organizing partners out there. You're all really key partners in this work, so we're delighted that you're on the call. Again, I'm Noel Frame, state senator from the 36th district in Washington State, which is the northwest corner of the city of Seattle. I've been in the legislature almost 9 years and spent the first 7 of those on the House Finance Committee and served a term as the chair of the House Finance Committee before jumping to the Senate. Hopefully, fingers crossed, we'll have a leadership position on taxes again soon as we look ahead to the 2025 session, and have been a partner in the organizing work with State Innovation Exchange and State Revenue Alliance on all things taxes and revenue as we talk to each other across the country about the great work that we're doing. So I'm really excited to be here today to share some of the great work that's happening across the state. To introduce myself as a resource to folks. I love talking taxes, so you can always follow up with me about all the things we talk about today. And to be available for questions that you all might have. So thanks for being with us. And with that, I'll hand it back to Erica.
Thank you so much. Hi, everybody. My name is Erica Wozniak. I use she, her pronouns. I serve as the legislative director here at the State Revenue Alliance. Just a run through of our agenda. I know you all know and love our partners at SIX very well, but our agenda is going to start out with giving a little bit of background on who SRA is, and then I'll spend the bulk of our time together talking about the legislative work that's happening across the country surrounding revenue and tax justice policies. We'll then talk, as Ida said, about themes, challenges, and what's next in this fight. And we have time at the end for question and answer, so please feel free to type your questions in the chat or use the feature on the webinar. So just a little 30,000 feet overview of SRA. SRA was founded in 2020 by Kristen Kroll alongside state movement and tax policy leaders, including our current executive director, Amber Wallman, who was previously the executive director at New Mexico Voices for Children. At SRA, we connect legislative, electoral, and advocacy efforts, as well as provide the support and desperately needed capacity to run and win collaborative, integrated tax campaigns to raise revenues and improve justice and tax systems across the states. We have a staff team of 8 who are available to offer strategic campaign support and coaching, connect partners with peers in other states, and provide technical capacity related to legislative, digital communications, data, policy, and research, coalition management, fundraising, and of course, organizing. As I said before, I serve as the legislative director at SRA, but I identify as a teacher. I proudly taught in Chicago public schools for 15 years as a 5th grade teacher, and like so many of you, felt the constant frustration of never having enough to give the best public service to the thousands of students that I was charged with educating. So that led me into advocacy work, and now here. because we all know in public service, it always comes down to the singular question, that's a great idea, but how do we pay for it? You may have seen this graphic or slide in past presentations from our friends at the Institute on Taxation and Economic Policy, or ITEP, but I think this map is really important to look at because it embodies why we need to all work together to make our tax system more equitable. As you can see, we have 34 states tax the lowest 20% of earners at a higher rate than any other income group. 41 states tax the top 1% at a lower rate than any other income group, and only 6 states, plus DC, reserve their lowest tax rates for their lowest income residents. It's an unjust tax system all around. We unequivocally believe that tax policy is people policy, that budgets are moral documents, and the way in which we raise our money and how we spend our money demonstrates where our priorities are. One of the many offerings at SRA is our cohorts. SRA has hosted cohorts surrounding digital organizing, ballot campaigns, and in partnership with our great friends at SIX, we offer the Tax Justice Initiative cohort. The TJI cohort brings in-state advocacy coalitions, labor partners, and legislators from across the country together to strategize, plan, and implement revenue campaigns and legislation. There are currently 13 TJI states, and we will be adding 3 more states in 2025 to include Michigan, Rhode Island, and Florida. Each state has an existing revenue coalition and legislators who are interested in pushing bold revenue policies. The cohort was launched in July of 2022. In the first year, we had 9 states introduce 11 wealth tax bills on the same day with coordinated actions in each state. Our advocates and legislative partners were able to secure 256 sponsors and co-sponsors, and those bills would have generated $120 billion in revenue had they passed. After feedback from our partners and internal reflection, we knew we had to continue to build and grow in the 2024 session, and we did. In TJI's second year, we were focused on building power, enhancing relationships, growing our media reach, and movement in the legislative process. Along with adding more states, we more than doubled the number of pieces of legislation and legislative sponsors and co-sponsors. And if all of those policies had passed, we would have raised more than $600 billion in just the 13 TJI states for their communities. Historically, tax policy work has been done primarily in partnership with groups focused on policy. At SRA, we believe that running strong revenue campaigns requires engaging all 3 legs of the stool, which to us means policy, labor, and community-based power-building organizations who represent the communities who are most harmed by racist tax systems, the workers who have been left out of tax policy, and the families who depend on funding for their communities. In order to win, we know that the table has to be big and it has to be inclusive. But we're up against a long history of exclusion and tax codes that have been designed to benefit those who create them, individuals who have historically been white and wealthy, and it's past time that we reverse that order. It's important to note that legislators like Senator Frame, who are revenue champions, win. We tracked the races of 51 dedicated revenue champions in 2024. We had 36 revenue champions who were up for election who were not contested. We had 5 revenue champions who had primaries, and every single one won their primary. We had 1 revenue champion who sadly retired, and we had 9 revenue champions who were not up for election in 2024. So if you hear from your colleagues that they can't win re-election if they run these policies, it's not true, and we have the data to prove it. SRA works with 35 states, and more are expressing interest in becoming a part of our community leading into 2025. We define tax justice as any policy that works to make the tax system more equitable for the many, including the TJI bills that I just shared. This year, our state partners introduced 35 tax justice bills. Now I'm going to go into the actual bills and their stories that you all and your colleagues moved in states this year. This list is not comprehensive to all 50 states. These are the bills that we worked on and with our grassroots partners. If you have additional bills that you think should be included here, I would love that feedback for future presentations. So this year, we tracked bills including wealth taxes, increasing corporate tax transparency, capital gains bills, real estate transfer taxes, raising corporate taxes, child tax credits and earned income tax credits, and worldwide combined reporting. So let's start off with the fun one, taxing wealth and high income. This session, our partners in California, the California Federation of Teachers, ran a high wealth tax bill, AB 259. This is an annual tax of 1% for residents whose net worth is in excess of $50 million and 1.5% in excess of $1 billion. The bill had a total of 10 legislators signing on as sponsors or co-sponsors and would have generated over $20 billion annually. It was referred to the Revenue and Tax Judiciary Committee. The new House Speaker in California, Jim Wood, provided the opportunity to have a hearing on the bill after years of not being able to. Unfortunately, the bill was up against legislative deadlines and had very little time for organizing advocacy, and the chair of the Revenue and Taxation Committee was hostile to the concept. The bill was held with little to no debate by the committee chair, but we still made progress. Our partners in New York, Invest in New York, or we call them informally IONI, ran a set of revenue bills this session to include corporate tax reforms, progressive personal income tax, billionaires tax, capital gains tax, and an heirs tax. 74 individual legislators signed on as sponsors and co-sponsors of those bills. Through the state's budget process, the legislature proposed a personal income tax increase of 0.5%. at $5 million and $25 million, and the corporate tax increase at $5 million from 7.25% to 9%. These measures would have raised more than $2.2 billion in new recurring revenue. Governor Hochul's staunch opposition to any revenue-raising measure blocked these efforts despite their wide support, but IONI and other groups were able to get pieces of their legislation added into the state budget. Our partners in Vermont, the Fair Share for Vermont campaign, ran two bills. A bill to increase taxes on marginal income over $500,000, which was H828, and a bill to tax unrealized gains for taxpayers with over $10 million in assets, which was H827. The unrealized gains was changed to a study bill on methods and impacts of taxing unrealized gains and incorporated into H546. This bill inspired a discussion across several states to form an interstate compact agreement to tax unrealized gains, which is now being considered by a partnership with 6 academics nationwide. Unfortunately, due to local staffing difficulties, the study committee did not make the Senate's final version of H546, though state and national partners continue to work on studying and coordinating to tax unrealized gains. However, H828, the original bill to increase taxes on high incomes, was amended and included in H829, a housing and revenue bill that included a new tax bracket to increase marginal taxes by 3% for income above $500,000. H829 was passed by the full House of Representatives, but was not considered by the Senate. We believe that we are well positioned to pass legislation to increase taxes on high income earners in 2025 in Vermont, as well as make further progress on taxing unrealized gains. And I will pass the mic over to Senator Frame to talk about Washington.
Thanks, Erica. And Erica, one of the things I have to say out loud to this crew is something that we say all the time in the cohort, is that we often overestimate what we can do in a year, but underestimate what we can do in a decade. It is one of our organizing principles. And so as we talk through this, the fact that we are making progress matters, because sometimes it does take a decade to pass revenue legislation. And that's exactly true for Washington State. Only 3 years ago, we passed a capital gains tax after a decade of work, and it is raising billions of dollars for our state. We are trying now to build on that success with the introduction of a wealth tax or a tax on the ownership of financial assets. This next year in the 2025 session, it will be the third biennium that I am introducing it. And each year we gain more momentum, more sponsors. We've gotten hearings in the House and the Senate. And like so many of you, coming off of the pandemic and federal aid, we too are looking at a budget gap, and the wealth tax proposal, these are the numbers, 1473 or 5486, they will have new numbers next year, remains an option in the mix for progressive revenue. Advocates are really getting excited about this and taking more ownership in our broader revenue coalition of this proposal. And the one that we had this last year as a flat rate 1%, which is our constitutional maximum, with an exemption of $250 million, because that is how my constitution is structured and how I can do these things, would have raised $3 billion of revenue per year. These are really big dollars that would be dedicated to funding education, housing, and tax reform, things like expanding our working families tax credit, something else that we passed after 10 years of work just a few years ago, which is modeled after the earned income tax credit. So heed all the news that you're about to hear today as progress towards a movement. We've done it before and we will do it again. Back to you, Erica.
Thank you. Totally agree. SRA, we often say winning the decade, which I appreciate. And I want to give a shout out to my colleague, Haron Mariani, who is on the call today, who was a campaign manager for the fair tax referendum in Massachusetts. And I wanted to include Massachusetts to demonstrate what happens when we win. So according to recent data from the Massachusetts Department of Revenue, the Massachusetts millionaires tax, which was a 4% income tax on annual income over $1 million, has generated an estimated $1.8 billion in the first 9 months of the year. And this is $800 million more than the Department of Revenue originally projected. The new revenue is constitutionally dedicated to education and transportation, and the larger than expected revenue available for key programs has been covered widely in national media outlets. The State Revenue Alliance was integral to the passage of the tax in 2022, with then Executive Director Kristen Kroll serving as a general consultant on the campaign. Also, following the referendum passage, the State Revenue Alliance hired the campaign director, Haron Mariani, the digital director and field director to join the SRA team. And we're supporting state partners in building out their legislative and electoral strategies. Additionally, in 2023, SRA built on this work by producing a case study of the Massachusetts campaign in order to validate the strategy and condense it into a single guide for other states to learn from. So if anybody is interested in that, we are happy to share. Let's go to the fun one, corporate tax transparency. The Maine Center for Economic Policy, in coordination with Mainers for Tax Fairness, unions, immigrant, and environmental groups, ran LD 1337 during the 2024 session, a corporate tax transparency bill. The bill would require a corporation that files a tax return in Maine to file a tax disclosure statement. LD 1337 was amended by the committee to require Maine Revenue Services to report aggregate corporate income tax data for the largest corporations doing business in Maine on a biennial basis. The bill was passed and will become law in January. The amended version met the goal of the original legislation and will set the coalition up for a worldwide combined reporting fight in the upcoming session in 2025. Additionally, important to note, the entire legislature also approved a bill that raised $500 million in revenue, but that bill was vetoed by Governor Janet Mills. For capital gains bills, to start, our partners in Connecticut, Connecticut for All, ran a capital gains bill, HB 5657. The bill would institute a 5% capital gains tax on certain taxpayers and could raise $600 to $800 million for the state's general fund and the special transportation fund. The legislature held a public hearing in the Finance Committee, and our executive director and deputy campaigns director testified in support at the request of the chair. Due to the large budget surplus this year in Connecticut, the bill was not called for a committee vote. However, our coalition partners were able to secure a commitment to funding for higher education programming through ARPA funds, which was their top priority this year. Because of their work to engage in changing the current implementation of the fiscal guardrails, which would have led to cuts in services, they built momentum to adjust, if not end, the guardrails in future years and connect them to the need to fix Connecticut's upside-down tax system. In Hawaii, Hawaii Appleseed, Hawaii Children's Action Network Speaks, and Hawaii Worker Center ran a capital gains tax, HB 1660, which would have raised $130 million for the state. The bill was referred to the Senate Ways and Means Committee after being passed out of the House Finance. Our partners had been trying to work to move this bill for many, many years. So this was a massive accomplishment to get it passed out of the House. Unfortunately, it was never scheduled in the Ways and Means Committee for a hearing, but because of a rosier than expected budget outlook, combined with this being an election year, likely contributed to lawmakers' reluctance to hear that bill. I already talked about the work happening in New York, so I will save some time and go on to New Mexico. New Mexico partners, led by the New Mexico Fairness Project Coalition, which is convened by New Mexico Voices for Children, successfully repealed nearly all tax preferences for capital gains. This year, New Mexico also passed legislation to ensure that big corporations pay more of what they owe in corporate taxes. The passage of these provisions were victories for both tax justice and revenues, and were the culmination of a multi-year campaign the SRA supported through strategic support and all right. Moving on, back to Vermont. In Vermont, H687 altered the property transfer tax, PTT, and lowered costs for average home buyers, raised the tax on high-end real estate, and generated revenue for new housing development. The final bill, as passed, lowered costs for some purchases by raising the cost at which the lowest marginal bracket is applied, and increased the PTT on second home purchases. Vermont's PTT goes to their Housing and Conservation Trust Fund to preserve land and develop new affordable housing. And I will pass the mic back to Senator Frame to talk about Washington.
Thanks, Erica. Very similar to how Vermont structured their proposal, we have an existing real estate excise tax, or REIT, that frankly, we only made a progressive tax 5 years ago. Up until 2019, it was a flat rate tax, which was not necessary. So we made it progressive. And our proposal this last year was to add essentially a 1% surcharge on the top for the most expensive properties that sold, and similar to Vermont, adjusted up that top, the cap where the lowest marginal rate applied, to make it a little bit easier for folks purchasing what would be kind of in that median home price range in the state of Washington, which sadly is quite high. So we were aiming to raise revenue to dedicate to our housing trust fund, which has been a really proven strategy for us to build affordable housing in Washington state. It did pass out of the House committee and sat in rules. It was heard in the Senate, did not advance. But again, I imagine this one might be back in 2025 as well. Back to you, Erica.
Thank you. Exciting work happening in Washington. As far as corporate taxes go, advocates in New Hampshire this year effectively defeated a $2 billion corporate tax cut proposal that would have harmed tax equity and significantly reduced revenue available for key programs. SRA support was key in this important victory as we worked with the state donor table to support dedicated tax coalition staffing, did crucial and timely bill analysis, produced over 400 state legislative district data modeling fact sheets demonstrating district support for revenue protections, and supported qualitative interview research, produced and reviewed communications materials, and we advised on coalition development and strategy. Our work in New Jersey to reinstate the recently expired corporate business surtax, which is a 2.5% bracket on corporate profits over $1 million, earned, was signed by Governor Phil Murphy. During the lame duck legislative session in November 2023, a bill to extend the corporate business surtax was introduced but did not advance. The late introduction by a retiring legislator did not allow the proposal bill to carry into the new session. Governor Murphy, thanks to the work of our advocates on the ground in New Jersey, announced a corporate transfer fee, A5878, during his 2024 budget address, which was the first step in bringing back most of the lost corporate revenue by imposing a 2.5% non-marginal tax on corporations that earn over $10 million in profits and dedicating the proceeds to fund New Jersey Transit. The legislature fully enacted the proposal, and this is to great credit to the coalition's sustained campaign efforts over the last year. Child tax credits and earned income tax credits did extremely well this legislative session. Thanks to our partners in Colorado, Governor Jared Polis signed HB 1112, which raises the percentages at which Colorado matches the federal earned income tax credit and child tax credits. And in Illinois, Governor J.B. Pritzker signed HB 4917, which creates a $300 per child refundable tax credit for families who earn less than the state's median income. And in New York, Governor Hochul signed A9257, which provides additional payments up to $330 to eligible taxpayers based on the Empire State Child Credit. And next, moving on to the ever 2025 popular worldwide combined reporting bills. In 2025, many of our partners are committed to introducing worldwide combined reporting. The Maryland Center on Economic Policy with the Maryland Fair Funding Coalition worked on the Fair Share for Maryland Act this session, which would have raised approximately $1.6 billion annually. The coalition was particularly interested in closing corporate tax loopholes through combined reporting and creating new income tax brackets that would make the top 1% pay a similar overall tax rate as low and middle income earners. After hearings were held in the Senate Budget and Taxation Committee and House Ways and Means Committee, the House of Delegates added a worldwide combined reporting portion of the Fair Share for Maryland Act to a must-pass companion bill to the state budget, SB 362, and made it a central piece of the budget negotiations between the House and the Senate. Ultimately, they weren't successful in keeping it in the budget bill, but they got through one chamber and heard from many legislators that the coalition's work changed the conversation around revenue in Maryland and nationwide. The Maryland House of Delegates is the first state chamber in the United States to pass worldwide combined reporting in decades. And with that, I will hand it to Ida, who will talk about what happened in Florida this year.
Thank you, Erica. And I do want to note a comment in the chat about Pennsylvania corporate tax, their House passed combined reporting. So I want to give a shout out to folks in the chat. And also for folks who have asked, we will send this amazing presentation as well as the recording after this. And quickly on Florida, and I do want to give a shout out to Representative Anna V. Escamani, my twin sister, who is the ranking member of the Ways and Means Committee in the Florida House. In the Florida legislature, there's a rule that if a bill does not get a hearing, you cannot introduce it as an amendment. And so working in collaboration with the revenue table in Florida, the People's Budget Table, Representative Escamani held back on filing a bill this year in order to force a vote on the state's tax package to force the conversation to the full floor on worldwide combined reporting. And that was a really big moment to compel the legislature to talk about an issue they may not want to talk about and also force the vote to not secure enough votes to be added to the tax package, but it is one of many tactics used to start this critical conversation in states like Florida. So we wanted to give a shout out to the Florida advocates and legislators that are challenging corporate power in their state. I'll pass it back to you, Erica.
I feel like all is right in the world that there are two Escamanis, so thank you for that. Now looking to trends and challenges that we saw collectively in 2024. As you all very well know, the work is certainly ongoing, and we have a lot more fights coming in 2025 and beyond. A few high level takes are tax cuts are a continued issue. More than $110 billion was lost in revenue between 2021 to 2023 due to personal and corporate income tax cuts. 1 in 5 states cut income tax rates in 2023, and 8 states cut rates in 2024. We saw Arkansas cut the state's top income tax rate from 4.4 to 3.9%, and the top corporate rate from 4.8 to 4.3%, losing more than $483 million in state revenue in only the first year. We know that public education is under attack. 20 states saw a combination of property tax cut proposals introduced combined with voucher proposals, and at least 5 states enacted the property tax cuts. We anticipate more will be coming over the summer and over the fall and on ballots. This trend of cutting taxes, especially for the top rates, will be devastating, and it is one we will have to actively combat in the coming years. States like Idaho and Illinois were able to fight back against voucher proposals this year, but these will not be going away anytime soon. Tax threats continue to plague even blue states. Democrats who are weak on taxes are jeopardizing the ability of legislatures to pass progressive revenue. In Vermont, there was a great deal of energy surrounding their fair share campaign. After compromising, as I told the story, the original bill to increase taxes on high incomes was amended and included in a housing and revenue bill that included the new tax bracket. It passed the full House of Representatives, but was not considered by the Senate due to a powerful chair who objected. On paper, we would think of this person as a revenue champion, but was the singular reason that this bill did not move forward. So we have a lot of work to do on training one another, even in a state like Hawaii, where there are a total of 8 Republicans in both chambers and a Democratic governor. We had major defensive work to do. Late this session, there was a proposal for a massive exemption of estate taxes, like for the billionaires with their third homes in Maui. The proposal came out of nowhere after our better than expected budget outlook, and any extra revenue was promised to the wildfire relief. Our partners were able to go on defense hard and won, which was amazing. But while they were focusing on killing that really bad estate tax, the Ways and Means Committee had gotten a hold of the governor's budget, and on the last day of committee, their proposal for higher earned income tax credit, increases to standard deduction, and adjustments to income tax brackets was heard and passed. According to our friends at ITEP, this will cost the state more than $1.4 billion in revenue over the next 6 years. So we need to reinforce over and over the popularity of raising taxes on those who can pay more and creating a fairer tax system for all. So looking ahead, that was really dreary with my last set of comments there. But despite those challenges, we are shifting the Overton window, as evidenced by the significant increase in positive media coverage. Words and phrases that we see most often appear in stories about taxes can start to tell us what the coverage is seeking to convey or to answer. These top keywords show that words associated with progressive policies are starting to move up the rankings. We have families, children, education, and economy, and have higher sentiment scores in the first quarter of 2023, which you can see in this graph. We are changing the narrative in a way that makes the word taxes a little less scary. We've also seen the number of legislative champions increase significantly. So we're collectively and actively working to provide evidence and education to bill sponsors, co-sponsors, staff, and all members of state legislatures that progressive revenue policies are super popular among their constituents, in driving home the message that if legislators want to make their constituents happy and get reelected, they actually should pass progressive revenue policies. So our teams can collaborate with all of you by assisting with communications, earned media, and digital resources. We also can provide bill analyses, bill design and writing, policy fact sheets, and talking points, legislative testimony, and my favorite thing that we do at SRA and 6, state-to-state connections. We can also support with rapid response, expert support when things get critical, connections with other legislators and advocates from other states, examples and exemplars of existing legislation, and district level data, which I will talk about more in just a moment. So SRA has 2 sets of modeling data that gets as granular as your state districts. The first is from 2022 and the second set is from 2024. This data has been used widely to reinforce and demonstrate support amongst constituencies surrounding raising taxes on corporations and the ultra rich. We can provide you with district level data, one pagers if you are interested. Just follow up after this. And let's take a look at some of the national data from our recent modeling. So the results of the 2024 poll conducted by Data for Progress demonstrates widespread support for raising taxes on the wealthy and support for working families. The research shows near uniform support across demographic groups, from rural to urban areas and across income and racial categories. Voters believe that no matter what folks look like or where they come from, they believe in caring for our families and leaving things better for future generations. To provide the care, support, and services working families, small businesses, and our communities need, wealthy corporations and people must pay what they owe in taxes. The current tax system is simply unfair to working families, and it must be changed. And you can see these numbers are through the roof. And of course, this coordination between the policy and the political opportunities looms large in the case of federal work as well, particularly with the discussions and negotiations already happening around the expiration of the Trump's tax cuts in 2025. We saw many of you in Washington, D.C. last week as we lobbied Congress on this work. Unfortunately, we know that state groups have too often not been proactively supported or resourced to engage strongly in the federal tax work, which has left our side weaker and less organized than our opponents on major federal tax fights. But we also know that when states are aligned and well-resourced, they can create really powerful movements that last beyond any one election or policy cycle and across generations. And so SRA has been a key partner over the past year in helping to develop the Fair Share America initiative, which is a robust state to federal hinge effort to align stakeholders on the federal tax fight. We serve on the leadership committee of and we are the state anchor for Fair Share. We work in deep partnership and planning with FSA to guide and support state group engagement in the upcoming federal tax fights. So with that, I'll just say one thing and we'll go to Q&A. For me, at least, the only way to do this work is to stay laser focused, as Senator Frame said, on winning the decade. This work is movement building, narrative shifting, and adding power for the long term. We're adding more legislative supports in 2025 to include power mapping, a legislative toolkit, and a legislative cohort. Our goal is to add more state partners, more legislative champions, to increase bill movement and work on proactive advocacy campaigns to set us up for success leading into 2025 and the years to come. Again, we know that states are enthused and looking to move worldwide combined reporting, and organizing around tax policy is very much expanding. We're working hand in hand with state campaigns as they continue to move individual legislators one by one to support policies like wealth taxes through thoughtful, intentional conversations grounded in district level data and constituent voices. as we start to think about how bleak this work can feel at times, and as we reflect on what is happening and how we can support states in the work over the course of a decade and even over generations, it's abundantly clear that we need to continue to collectively build power around these fights. We're not always seeing the legislative outcomes that we want yet, but we are seeing the narrative change. We're seeing power being built and engagement of folks that are most impacted into policymaking. This is huge, since tax policy historically has been designed to exclude those folks who have been impacted the most. So these are the things that are laying the foundation for long-term generational progress that we need across our states to do better for our kids and our communities. And I will hand the mic over to Ida to facilitate Q&A, and also would love to hear from you what supports you need from us.
Thank you, Erica, giving you virtual snaps for covering so much ground in a short amount of time.